Welcome, this is the Speculator at Take Your Profits. This is going to be another post-trade review for trade number 85, which was another trade I took in the Aussie dollar US dollar market. Going into the actual chart for the trade. This was the chart for my set, indicating my set strategy, which was where I had my stops, entries, and targets placed as per my ProTrader Dashboard. Going into that, actually, I want to see what it was that made the trade what it was. Going into the first question of the post-trade review. So this trade number 85 was on a 30-minute chart. Trade number 85 was a trade decided on a 30-minute chart. Scored points for price being at a minor level of structure. Scored ratio confirmation points. It scored points for ABCD harmonic pattern completion. Scored points for a Gartley 786 completion. That means that price had retraced to a 786 retracement of the XA leg of the defined Gartley pattern completion. And then it scored points for having showing characteristics of, in this case, bearish divergence, because this was a sell. This was a sell on the Aussie dollar market. The probabilities of this trade looked pretty good, being that it was mathematically defined as a 30% winner based off of my previous experience trading this particular group of characteristics, with a group win-loss ratio of 1.4, meaning that for every loss I take, I win 1.4. And with the overall profit and loss of this particular CTS group being $776 for the year on this particular strategy. So that's what was planned based on the characteristics the trade had showed. And based on those characteristics, I decided it would be best to have a set strategy where my stops were placed just above point X. This is point A, this is point B, this is point C, this is point D. Now, the harmonics weren't 100% perfect, as the actual A to B, C to D move completed somewhere just short of where my actual entry was, and where the actual ratio confirmation was indicating, which was right here at the 786. The 786 retracement confirmed the 127.2 extension of the ABCD of the AB leg of the harmonic move. The inverse extension was also a 127.2% extension onto that 786 retracement. So in this case, once price exhibited this bearish double top in price, showing this bit of actually where I took the trade was here. So this was my first test of structure at the 786. This was the second test of structure at the 786, which confirmed the bearish divergence here once the stochastic indicator did not break above the extreme buying point. So this is where I entered the market on this candle once I got confirmation, a 2-bar lower close, giving me the probabilities that the market was going to continue to move. And if this market didn't turn around here at the 786, there was always another opportunity to short the market again here at the 886 retracement, considering that we have a pretty nice looking Gartley pattern completion with a 50% retracement of the AB leg, confirming the 786 retracement of the XA leg for the total move. Now, that's what was planned, was to get initial targets here, secondary targets here. Now, this also coincided with another plan. What I wanted was on a higher time frame. I was actually looking at this as a possible trend continuation on the short side, because on a higher time frame I had actually gotten stopped out here on a previous trade. So the idea was to let price retest structure, which it did here, to take the trade short, and then being that there was a Gartley222 completion at this level gave me the confidence in believing that there was a good probability that the market would continue to go short. Now that was the plan. Now, unfortunately, that's not what happened. As you can see here, the market consolidated here at the 786 for quite some time. Not so much time, but a little bit of time. This was my entry here. Had to endure a little bit of pain. The market continued on in my direction, testing the 200 period moving average, never getting to my my stops. Now, being that never getting to my stops, or to my targets, I'm sorry. Price retraced, tested the 886 retracement of the XA leg, attempted to move back in the direction of the anticipated trade, and then continued to work against the position to finally get stopped out at the initial protective stop area. Now I want to double check to make sure that's exactly where I got stopped out. 1.0388, and that is in fact where I got stopped out, which was above point X. I chose not to reduce the position, the risk by half, because of the potential for having a double top trading scenario here if the price would have continued to move, if the market would have continued to sell off. However, that's not what we got, and unfortunately, this was, another example of good analysis, and it just was a failed Gartley pattern completion. You can't really complain too much about those. Is that's just going to happen. Losing is very much a part of trading. So this is just one of those things you got to accept about the market. Is sometimes you're going to have great analysis, but at the end of the day, you're just going to have a losing trade. And this is why it's so important to make sure protective stop placement is obeyed. Now, because this particular trade did get stopped out, the next trade number 86, which this is the actual setup for it, is a trend continuation trade, being on a lower time frame on a 5-minute chart, being that the price did stop me out. That gives me a clear indication that the market has a probability of continuing off in the direction that was against this original position. So in an attempt to gain some profits on a trend continuation trade against this particular position, the following trade after this did activate a trade in the other direction. So that is a good thing, being that that was one of the areas I needed to improve based off of the previous experience that I've been having, is being able to actually reverse the positions when my reasons for being in a particular trade are invalidated, number one. And then number two, trying to get into finding a good way to improve upon this particular opportunity. I would have to say this particular combination of ratios, which has on this particular Gartley, which has the AB leg completing at a 50% retracement of XA, and combining that particular ratio with the ratio of the ABCD completing at the 786 retracement of XA, we could argue that the 50%, once we have a 50% retracement of the AB leg, it's a better opportunity to wait for the market to get to the 886 retracement once it completes the ABCD harmonic pattern, which in this case would have been stopped out anyways for less risk, of course, because the trade would have been taken at the 886, which would be an improvement on this trade, which would mean that the only way to improve this trade would be to have more patience to wait for price to complete at the 886. However, my personal trading style, I have had success in the past with taking trades short at the 786 when the combined AB ratio is at the 50% retracement of XA. So it's just a matter of taking on an additional type of Gartley pattern completion that I do like to trade, and that just fits my particular risk parameters that I'm comfortable trading. I trade either the AB going to the 618% retracement and combining that ratio with the CD leg completing at the 886, or in this case where we have the AB going to the 50% retracement and the CD completing at the 786. So those are the two different Gartley ratios I like to play with, and I like to make my trading decisions off of. In this particular case, that ratio didn't work, as the Gartley continued to move against the position that we had in mind. It was a good trade because I was expecting the 200 period moving average to hold as some kind of resistance, which it did not. It was retested here as support after the trade had commenced, before taking out any profit targets. So this is just one, this is some of the trades you got to deal with. I can't get upset because this is just part of the game. There's going to be patterns that just don't complete as expected, and this cannot prevent me from continuing on and executing new trades for this strategy, because the very next trade could be the one that makes up for all the previous losses that were incurred for trading this strategy. So at the end of the day, this was a post-trade review for trade number 85, the short in the Aussie dollar US dollar market. I appreciate you sitting here and watching this video of my trading experiences. This is a speculator signing out. Don't forget, take your profits.